Welcome to RFI's Banking Uncovered, the podcast going behind the industry PR, the media spin, the product awards, and the investor reports to look at what's really going on in the customer data, and to ask global thought leaders about their thoughts and views on the future of banking and payments.
Welcome to RFI's Banking Uncovered, where we go behind the PR and the media spin to focus on what's really going on in the customer data. As everyone knows, the UK is one of the leading centres globally for fintechs. In 2023, there were over 3,000 fintechs in the UK, generating over $3 billion in revenue and over $1.2 trillion in transactions. Given the huge number of fintechs in the UK market and the fact that it's growing and growing, and the fact that 75% of UK consumers use fintech specifically for payments, it's a huge pleasure today to be talking to Rupert Lee Browne, the chairman and founder of Caxton, one of the profitable fintechs in the UK market, specializing in payments and money transfer. So welcome to Banking Uncovered, Rupert, and thank you very much for joining us today.
Well, thanks, Charles. It's always great to talk to other founders. And as a founder of RFI, you know, you've been on a similar, I assume, a similar journey. So no, it's always great to have these sort of conversations.
Yeah, one of my favorite quotes, and I think I've plagiarized this completely from the founder of LinkedIn, is that founding a business is like jumping off a mountain and trying to build the aircraft to fly in on the way down, which I think is a very apt description. Fun, challenging, but slightly alarming at times.
Alarming at times, but yeah, and that you just never know when the next challenge is going to come from. There you can be guaranteed that there are challenges, but alongside that, you get some phenomenal upsides, and you get to hopefully have a little bit of fun along the way.
Yes, absolutely. Fun, but hugely challenging at times. But jumping straight into some of our UK data. So according to the latest RFI UK data, we know that 75% of consumers who use a fintech for making payments or for money transfer are very likely to switch their main bank in the next 12 months. Now, that's obviously a huge threat for the UK high street banks, and a massive opportunity for yourself and other fintechs playing in this space. So when we see a bank like HSBC launch Zing, what are your thoughts on that? Do you think other banks will be launching similar kind of products? And, what are your thoughts on Zing and on the market overall?
Zing is not the first attempt that banks have been to try and counter the threat that fintechs have. RBS have done it in the past, and there have been countless attempts to try and copy exactly what fintechs or even challengers have done. So I think that in general market terms, there will always be high street banks. There will always be challengers to those banks or certain services to those banks, and there will be an ebb and flow of solutions that hopefully suit the customer, and bring the slight laggards along and to improve their services. So, I mean, from a business perspective, Zing launching is not necessarily a threat to our business, predominantly because it attempts to do something that is just one very small part of our service. But I think that it does signify that the banks are serious about serving their customers, and I think what they're doing is learning from the challenges that are turning up. In terms of loss of business, I don't think that the banks are going to disappear anytime soon. What they provide is something that the challengers can't, which is longevity and the ability to withstand market conditions, up and down. These things, as we started out the conversation with, markets change, but banks have a significant strength and a reliability, and with that they bring the sort of things that we need as consumers. It may not necessarily always have a pretty front end, and customer service can be slightly patchy at times, but as we've seen very recently, customer service from other fintechs can be extraordinarily patchy.
You speak about markets. I know one of the things that we've often spoken about is when banks tend to think about payments, whether it's for consumers, whether it's for small businesses, they tend to bifurcate between the domestic market and the cross-border market. What we're starting to see is that as far as the customer, consumer or small businesses, that there's no differentiation there. So what are your thoughts around that, particularly, when you're thinking about your value proposition and how to develop it?
Yeah. So as the cross-border market has developed, I mean, bear in mind that when we launched, you could only use a bank. That was the only way to actually send money overseas. And as the market has developed, so we've seen a vast number of new players coming in. Some of them with some interesting propositions, some really innovative stuff. But by and large, the market has become more and more saturated, and so it becomes harder for players to stand out. So at Caxton, we recognized that the market was becoming saturated, and it was very difficult to differentiate. So the logical step for us was basically to widen our service offering, to widen our product suite, and really just to provide all payments, whether they're international or domestic. And I mean, quite frankly, FX is just a calculation between one currency and another. The actual payment methodology, from our perspective, is exactly the same. So whether it's going to Dorking or to Dortmund, this really doesn't make any difference to our systems and processes. So whether it's international or domestic, we believe that that what our customers want is the ability to send money, full stop. And if it is overseas, then great. We know that we can provide that same level of customer service domestically or internationally.
Great. You spoke about trust earlier and about, we need the banks for security, for longevity, for, withstanding sudden changes in the market. One of the challenges for many fintechs, not just in the UK, but globally, is banks do represent that security. And when it comes to your money, consumers define trust as keep my money safe and keep my personal details secure. Those are the only two things they want. Look, I want my money to be there when I go to get it, and I don't want my personal details going anywhere. But completely understandably. And I think, if we go right back to pre-pandemic, if we go right back to the financial crisis in 2008, 2009, I remember at the time consumers said, I want to see a branch made of bricks and mortar that I know my money is in. I don't want it floating around, so to speak. So we've moved on a bit since then, but trust is still very important. And despite the huge inroads that fintechs and tech companies have made, and they've made massive inroads on gaining trust over the last 5 to 6 years, they're still roughly about sort of 5.6, 5.7 out of 10, whereas the banks sit at the top of the pile ahead of even schemes at sort of 7.5, 7.6 out of 10, as far as consumers are concerned, though it's slightly different with small businesses, and I'll come on to that in a second. So obviously, as the founder of a fintech, you've got all the advantages of being fast, of being innovative, of providing a great customer experience. But how do you start to build a brand that starts to help establishing that same kind of level of trust that those big high street banks have?
Yeah, and that's I think one of the key questions across the board in fintech. What is it that you can do that can engender trust? With your two elements that you described earlier, which is holding your money and holding your data safe, I'd add a third one, which is basically doing what you say you're going to do. So when it comes to making payments or receiving payments or holding money safe, you've got to basically do exactly what you say you're going to do, and don't waver from that. Customer service is key. A charming voice on the end of a phone helps engender that level of trust. But fundamentally, it's about doing what you say you're going to do, and then building on that advocacy from those customers, ensuring that they do actually shout about how they trust you. How you go about doing that is you've got a multitude of different opportunities throughout the media to do that. But fundamentally, it's about it comes back, I think, to the culture of a business. If you set out to make money rather than serve your customer, and these are very significant differences, I would say. If you set out to make money, then you are doing everything possible to extract as much value from your customers as you possibly can. If you set out to run a business that is serving your customer, then you're building a culture within your organization that actually thinks about how that customer feels and the reactions that they have. So I would say that if you can build a culture centered around the customer, the money comes along. As long as your business model works, then the money comes along. But if you try and force the money issue first, then and we're seeing this on a regular basis now. Fintechs have grown extraordinarily fast, as you say. But there was an article in the FT recently, last week, about the number of complaints that are actually coming through from fintechs, and it's soared in the last 2 years. I mean, it's almost an exponential rise of complaints about fintechs and the way that they're behaving. Now, there are some of our competitors that have got quite extraordinary levels of complaints, because fundamentally what they're not doing is considering what it's like from the position of the consumer. They're engaged in a land grab and a desire to be the biggest. Actually, what they should be wanting to do is to serve the customer first, and if they do it extraordinarily well, repeatedly, again and again and again, then they will be, they will find their place in the market, and people will trust them. And at the moment, my concern is that the slightly poor practices, the very poor practices that a number of companies in this space are engaging in, is having a negative knock-on effect for all of us. I think in order for the market to operate properly, we all need to treat our customers fairly, and I don't think that regulators are necessarily wrong on this, but it does come back to the culture that you create within the business first and foremost.
And where do you think that culture comes from? I mean, obviously, as another founder, the customer experience was absolutely paramount to that. Obviously, RFI is a B2B company, so it's a lot easier with a smaller number of customers to really focus on that. But even as you broaden out, whether it's B2B or B2C, you get into these situations where these metrics are being bandied around. I mean, if you just go onto LinkedIn and scroll through half a page, you'll have someone telling you that these are the metrics you need to focus on if you're launching a business, and it's all about market share, and it's all about land grabs, and it's all about this metric and that metric. Is that investors driving that behavior of sort of acquire customers at all cost and don't be too concerned about the experience for them? Is it a new breed of founder or entrepreneur who are sort of spurred on by what they read in the media, and they just want these big numbers without thinking about the culture they're creating? One of the things I remember reading 20 odd years ago, and apologies for aging myself and you by association there, but was that culture in a business is like a little houseplant in the corner. Like, if you don't really notice it, but if you don't tend to it and water it, it will wither and die. Whereas if you do tend to it and water it, it'll grow and bloom, etc. So is it a shift in new businesses trend that we're seeing, or is it more investors being more short-termist? Or what do you think some of the drivers are behind that lack of focus on the right culture for providing a financial experience for a customer?
Well, the atmosphere at the moment is very much driven by investors. And I think that there's also been an environment that's grown in the last 10, 15 years, probably more like 10 years, that has encouraged short-termism, that has been driven by investors. I mean, the investment market, particularly in the fintech space, didn't exist before the financial crisis. It was possible to raise money. But what we've got here now, or have had in the last 10 years, is an engine of money coming in and suggesting that this metric or that metric is the way to build the business. Because fundamentally, what's happening is that the money is driving the business rather than the business looking for funding and getting funding. But fundamentally, the founders understanding the business that they're in. I think what's happened is that the investment market has grown and flourished and become process driven in so many respects, that those people who want to start a business feel that this is the only way to do it. It should be a wake-up call for anyone wanting to start a business or having started a business, is that you don't have to take VC or PE money. There are remarkably other ways of starting a business, one of which is to bootstrap it. So you don't need vast amounts of money. If you think about the infrastructure that we've now got in terms of being able to start a business with no money, it's remarkable. It's extraordinary, the tools that you get for either nothing or very little, the automation that you can buy for very little indeed. None of this existed, as you know and as I know, 20 years ago. You know, we had
it would have been fantastic if they had done. I'm constantly stunned by when we're talking to clients about the products they're now offering, particularly in the small business space, about all these wonderful products which are all around customer experience, providing really useful, well thought through things that enable a business to flourish, as opposed to 20 plus years ago when there was nothing. Even starting a business, there was no. You never told anyone 20 years ago you were starting a business. My favorite was telling someone who offered to buy me a pint because they felt so sorry for me that I was doing this ludicrous thing. But you know, it's the products now are incredible, and as you say, if they're not free, they're almost entirely free, and they're there at the click of a button. To be global, you just simply need to launch your business. It's amazing.
Yeah, and there has been a remarkable relaxation. I mean, the regulators are now starting to tighten up, but in the UK, the ease of which one could start a financial services business, particularly technology driven, has been extraordinary. If you look at, for example, the payment acceptance market and the open banking market, there's a wonderful little business that was literally started by two guys in a bedroom, and within 3 months they built a whole interface with open banking and started working properly, and it works. So you can see how easy it is to do these things. However, what everyone seems to be obsessed by is raising the money. And fundamentally, you don't need to do it. If you want to grow your business, the ethics and the culture with which you do that is much, much more important than the money raised in cash. I think if we can move away from this obsession with how you raise money, that you need to raise money, then I'd say that would be a far better thing.
Absolutely preaching to the choir here as another bootstrap founder. Just coming back to understanding the customer and talking about small businesses as opposed to consumers for a second. Right now, we're seeing a real step change in the UK and in other markets globally that's really occurred in the last kind of 12 to 15 months, with small businesses all suddenly looking to potentially change their financial relationships. And the number one driver, whereas previously it was all around operational efficiencies, and I've got a question on that in a minute, but really focused on facilitation of a fantastic digital experience. That's what small businesses want. And when you ask them, well, what do you mean by facilitation of an innovative digital experience? They say, I want to be able to make payments from where I want, to whom I want, and to receive them when I want. And then from an operational point of view, obviously I want the speed and the ease and the security, but I want to be able to, I want reconciliation, really easy reconciliation. So bearing in mind, reconciliation and providing an innovative experience, what are some of the things that you're thinking about at Caxton's from a proposition point of view when you're targeting that?
Yeah, and the digitization of businesses. One would have thought that in 2024, there wouldn't be a business that isn't already highly digitized, but it's remarkable how many are still going through that process. And I think in the upper size of the SME market, you'll find that the very last department to be digitized is the finance department, is the finance team. So there are certain watershed moments. One of which is when an SME is big enough to employ a new finance director, or when a new CFO comes in, or somebody who basically professionalizes the finance process, whether that's a team or not is largely relevant. So that watershed moment is a really important moment for us, because this is the point at which they can start to say, well, I know that you've got, for example, your bank, and you've got 3 or 4 other fintech solutions that you're using, but actually you can use one. You can use one, and you can integrate that either using technology or a little bit of file upload and download, and you can have these services provided either embedded, but fundamentally it means that you can digitize, you can automate a lot of the processes that a finance team would otherwise do. Now, the question is whether or not you want to do that with lots of single point solutions, so lots of different fintech businesses that can do different things. So if we take expense management, there are a number of expense management companies out there, but they only do expense management. Then you've got companies that will do international payments, others that will do domestic payments, others that will collect payments. Now, we believe the opportunity is for a multi-point solution, which is a company like Caxton, funnily enough, that can basically do all of these things off the same platform. And dependent on your sophistication as a business from a technology perspective, we can provide that. So if you want to do it on the phone, we can do that. If you want to do that on an upload, on a file upload, we can do that. If you want to integrate it with your Xero software, or with your QuickBooks, or with your Sage, or even getting down to it, when you're big enough, your Sun or your Oracle or your NetSuite, we can do that. And we can also, if you want, connect via API. So that is that level of sophistication, whatever level you're at, we can provide for it. But I would absolutely argue that you don't really want to go down the route of lots of single point solutions, because that's a new contract to be negotiated every year times 3 or 4 or 5. So I think the opportunities in the SME market are massive, absolutely massive, because SMEs, above all, as you say, they want to automate, and they want to, and it always comes back to a reconciliation. I don't know any business that doesn't find reconciliation complicated and a bit of a pain in the neck.
Yeah, absolutely. You mentioned a couple of times, customers getting on the phone, and obviously that throws up the customer experience channels. So generative AI, we've had AI for 5-10 years in various guises. Generative AI has obviously been a bit of a game changer. I read recently that Klarna states, I haven't checked the veracity of this, state that they've replaced 700 humans, I think, with AI, using a generative AI tool for customer experience. They've reduced the customer interaction time from 11 minutes to 2 minutes, and they've also added 40 million to their bottom line. So lots of good things about generative AI when it comes to the customer experience. As a business that's so focused on maintaining the right culture, and a culture that really looks after the customers, how are you thinking about generative AI and the customer experience? What are some of the benefits and some of the pitfalls that you're sort of aware of, and you want to kind of make sure, like others, that you sort of steer around?
Yeah. And I think it's a fascinating point, this, because we're all expecting to hear and see AI anytime soon. And there are a few examples. There are some very good examples of where it works. If we come back to Caxton, we're at an early stage, let's say, of using AI in different areas, but customer service is not necessarily one of them, predominantly because we do believe in very personal service, and you've got to train. The issue is training AI, and you need vast amounts of data in order to ensure that you are providing the right solution, because otherwise this is just automation in so many respects. My experience, or our experience, is that there are very, very few examples where it really works. You end up, unfortunately, at the end of an Autobot that doesn't answer your question and can't actually resolve the issue that you're having. And I'm not saying that individuals are perfect, and sometimes they don't turn up for work, and sometimes they can be wrong in in the answers that they give. But at the moment, we're fairly sure that generative AI is too young to be trusted to provide the sort of customer service that we like to give our customers. Put it that way. The fact that some players in this market think that they're going to be replacing thousands of customer service agents, you have to wonder why they've got thousands of customer service agents in the first point. Is the product not working, or is it, or are there issues with the product that they're actually selling in order that people actually need to be in touch? So there are other areas within the business that where we think that AI will work better at an earlier stage. We think that there's all sorts of areas like transaction monitoring, fraud, where we do have large amounts of data that we can then sort through and manage properly. But right now, AI customer services, you ain't going to see it from Caxton just yet.
And you mentioned fraud there and competitors. So when you're thinking about the competitive landscape, what keeps you? I mean, sure, lots of things that keep you awake at night when you're running a business. But what keeps you awake at night from a competitive point of view? Is it something like Zing from HSBC? Is it another fintech? Is it regulation and what's happening there with fraud? What are the big challenges that you see that you're focused on at the moment over the kind of the next 6 to 12 months horizon?
Yeah, competition is less of an issue for us. As you say, we've been around for a long time, and we've seen competitors come and go, and that's just the fun of the fair. The headwinds that I think we see this year and next year and probably the year after is going to be a mixture of regulation combined with increased fraud of a much more sophisticated level. So there are significant increases at the moment of authorized push payment fraud, or APP fraud, and that is being tackled by the industry. It's being tackled by the regulator, but it's significant right now. That's not going to get any simpler in terms of tackling it. It's going to be what we are going to see is generative AI coming into that, if it isn't there already. What we are going to see is significantly higher levels before companies, particularly in our space and in the banking space, get real and really tackle fraud from a cultural perspective and also from a technical perspective. So the headwinds are regulatory. It is fraud-based. There is always something that comes from left field, so heaven knows what that's going to be. But we would certainly we certainly see the next 3 years or so as being a mixture of opportunity and headwind, more of that mixture than one would have actually previously thought, certainly pre-pandemic.
So we've got fraud and cybersecurity increasing dramatically in every market. And in October, I think, of this year, there's the liability shift that the regulator in the UK is bringing in. So obviously it's positive for the customer. It's ultimately going to be positive for the industry, but there's going to be quite a bit of churn and quite a lot of stress when that occurs. So what are your thoughts? Yeah. Thoughts on that and how that's going to play out in the short to medium term?
Yeah, so the liability shift that you talk about is, come October, there will be a 50-50 liability between a receiving bank and the sending bank in terms of an APP fraudulent transaction.
Yeah.
So if your bank sends money to Caxton, for example, and it turns out to be fraudulent, then both Caxton and your bank will be held liable. There's a lot of complication around this, particularly in terms of how you go about refunding that money, not initially to the customer, but how does that refund process work? How does that chargeback process work in scheme parlance? And I think that the short timescales involved that the regulator is requiring are unrealistic. I think there's going to be an enormous mess come October, if indeed we find ourselves at that stage, because there are still not even any technical standards that have been published by the regulator. So I think that there are some real real humps to get over before we even get to that stage. I don't think that the concept of liability, of shared liability, is wrong, but I think in terms of execution, it's got a long way to go. So what we then bring into here is the whole question of cybersecurity, which is a massive issue. Most companies in the UK, particularly smaller companies, are unprepared for a cyber attack. And what we're finding is that there is a far greater number of SMEs that have no plan whatsoever for when their email account is actually compromised.
And on top of that, one of the things we see in our data, and the UK more than any other market we look at globally, when you ask small businesses, okay, well, who's responsible for your cybersecurity? They say my bank, which creates a Pandora's box of terrifying possible outcomes.
Yeah, and I do think it's an unhealthy environment where the financial services businesses, so the banks or the payments businesses, are held 100% liable for any money that is lost. Fundamentally, businesses and individuals need to take responsibility for their own cybersecurity. And at the moment, what we're seeing is a shift towards the regulator saying, well, okay, so banks, financial services, payments businesses, you will hold complete liability. We have no control over what our customers' cybersecurity precautions are. We can't do that. Now, what we have seen over the last 20 years at Caxton is very, very few straightforward man-in-the-middle compromises. But in the last 12, 18 months, we've seen a dramatic increase in this. Now, I'm very happy to say that we're prepared for that. We run weapons grade technology specifically on the cybersecurity side. Now, we think that all companies should do that. We understand they don't, but we really don't think that we should be held liable necessarily for some other businesses failing when it comes to security.
It's the age-old issue. I mean, yet again, in financial services, you have a well-intentioned regulator doing something that's going to cause admin chaos. That's unfortunately not the first, and it won't be the last time that happens. But I remember 20 years ago, there was moves by regulators in the UK and other markets because of credit card debt, saying, these individuals, and the tabloids loved finding one, I've got 8 credit cards, each with £50,000 on, they're all maxed out, I earn £20,000 a year, and it's the bank's fault, and the regulator saying, the bank, it's your fault. And at what point, if you earn £20,000 a year, should you not have 8 credit cards with £50,000 on and max them all out? There has to be some sense of personal responsibility. A lot of the cybersecurity that happens, and this is where it gets really tricky, is at what point do you step back and go, that was your fault. It was very clear you shouldn't have hit return on the keyboard. You shouldn't have pressed yes. It was quite clearly potentially fraudulent. We flagged this might be a fraudulent transaction. You went ahead anyway. That you have to kind of wear that. So it's a kind of dichotomy that's been playing out for years in financial services. At what point personal responsibility shifts to regulatory responsibility? I'm sure it's not the last time we'll discuss it, unfortunately.
No, and I get that the intention from the regulator is there. The issue is this assumption that the company selling the product in the first place is the one that should be blamed. I mean, if we take a very simple analogy with the vehicle market, if my car is stolen, the car manufacturer isn't blamed, and they're not required necessarily to find me a new car or to replace my car. So I'm not entirely sure that we in the financial services industry should be blamed at all points for everyone else's failure.
Yeah, that's a good analogy. We've spoken about bootstrapping, we've spoken about culture, we've spoken about founding the business. We also spoke about fintechs and payments. So as I said at the start, you've founded Caxton's, you've been through the financial crisis, you've been through the pandemic, you've been through crowdfunding, you bootstrapped initially. if you were talking now to somebody who is thinking about, had an idea, and they were thinking about, founding a fintech, what one piece of advice or one thing they should focus on, would you say, focus on this, above all others? Obviously, there are so many things to focus on when you're launching a business, but what focus on this above all others, because this is what I think is, and what I've learned over the last 20 years is key to building a profitable, successful fintech.
There are too many words to describe it. So I'll use a few if I may. Let's start with bootstrap. Bootstrap. Reconciliations, cash flow. Cash is key, absolutely key. If you have
Cash
it,
is king.
If you have it, hang on to it. Do not spend it. Culture amongst your people. This is. I made mistake after mistake after mistake about the culture, and who we hire and how we truly create that vision for people internally, not just externally, but internally. How do we create the mission for those people internally? And I think there's also a really interesting thing now in that internal is external and external is internal. So if you're talking to your customers, you should also be talking to your team in exactly the same way. You can't talk about a culture in a business without talking about your customers. But fundamentally, it comes back to the people delivering the service or creating the product for your customers. So it's absolutely vital that culture is the bedrock of your business, because that creates longevity. I think also, flexibility, just concentrate on that customer. Concentrate on providing the service to the customer, whether they're internal or external. I think that's probably the thing that I would really focus on most.
Yeah, and it's so important to make sure, as you say, that you've got the same. You haven't got one set of values for how you deal externally with the customer, and then a completely different set of values for how you deal internally with your team. Most startups, particularly if they're bootstrapped, even if they're funded by investors, are very rarely flush with cash. So people are working extraordinarily long hours with a huge amount of passion, helping you build a business. You want those people to be happy and successful and thriving, because if they're happy, your customers will be happy. I'm a huge fan of getting the culture right, and I think, as you say, too many businesses don't focus on the culture at the start, where you really want to get that culture right, because that will drive happy clients. And if you haven't got happy clients, then you should probably rethink the business model at some point.
Yeah, absolutely. And in terms of that culture, I think transparency and honesty with your team. If things are going wrong, people will understand that. But I think you need to be transparent and make sure that you bring people along. Bringing people along on a roller coaster ride is complicated. But I think that if you are honest with your team, both in terms of what's happening, whether it's positive or negative, most people will understand that. I think what happens when cultures fail, it usually relates to the sort of transparency that people internally and externally feel that they haven't had. So it's there's many factors to consider here, and there is not one single skill or not one single element to a business that makes it work. You can start a business, but it can but things can just work against you. It's happenstance with a little bit of skill involved. In your case, Charles, I know that for a fact.
That's very kind. I remember the financial crisis was just as trying to launch a business, the financial crisis rearing its head, and you're launching a business in financial services. For both of us, was an alarming and very challenging moment. But as you said at the start, one of the things about running a business, a fintech or any other business in financial services or out of financial services, yes, it's challenging. Yes, sometimes it's exhausting. Yes, it's draining. But it is fun. And if you're having fun, then there are going to be things that don't work. And trying to pretend that hasn't happened is is never a good idea. I've always said if you can get it right 51% of the time and only wrong 49% of the time, that's enough margin for you to be doing well and things to be moving in the right direction. Though I obviously wouldn't have that as an internal business metric, because that that could be a little bit dangerous.
Well, but I mean, it is interesting because things will naturally go wrong. And just to come back to one of your first questions about trust, one of the ways of building trust is to say, yeah, okay, so we've got something wrong, but it's what you do to make things right that really matters, and that's when people start to trust you. I remember years and years and years ago, we had an incident with a client who sent some money through us to buy his plot of land next to his house in France, and for whatever reason, the money went missing. As it happened, it was actually stuck at the other end, at the French bank. And quite naturally, the client was getting irate because he wanted to know where his money was. And the day before he was supposed to complete on his property, so it was pretty much down to the wire, we knew where the money was. And it was actually coming back to us, which was useless to him. Phoned him up, and I said, so where are you going to be tomorrow morning? And he said, I will be in Carcassonne at my house. I said, fine, I'll meet you at Carcassonne Airport tomorrow morning with the money. And I got on an early EasyJet flight to Carcassonne with a banker's draft in euros, and I met him at the gates, and I handed him the money that was and so he could actually complete on time. And he was completely bowled over. And he said, well, no one else would have done this. Why did you do this? I said, well, because we can. We knew what we could do to fix it. And you getting your plot of land is important to you. So why wouldn't we do that? Why wouldn't we sort this problem out? So I think that the moral of the tale is that if you can do something to resolve the problem, then absolutely you should, rather than necessarily making excuses or walking away from it.
Rupert, that's a fantastic story to finish our chat on. As always, it's great talking to you, hearing about your insights and thoughts and expertise in the area, not just of fintechs and founding businesses, but obviously within payments and cross-border payments. Thank you very much for your time, and we look forward to talking to you again soon.
It's always a pleasure to talk to you.